What's up, everybody? I want to go over a trade recap for Friday and what I'm looking at for Monday's trading session on these 5 pairs and my recap on Friday's trades. So I want to start with gold and what I was looking at on the long term. So we've come into a perfect 2-point correction area, 2C2P, and we aggressively pushed up and we took out this liquidity before having a pullback. And again, exact same situation, 2C2P, 2-point correction, 1, 2, 2-point protection, 1, 2. So this is a great time to get in, and however I missed this trade. But look how perfectly it went up. And again, we pulled the liquidity and finally started going into a sell-off. And we moved underneath this to get a deeper pull in this liquidity and responded really well. After coming down a second time, we held the area, so I looked for a 2-point correction on a new uptrend, and this is what I saw when I was looking for my entry. Okay, so as this was pushing up, there was no pull on liquidity. So I decided to take a presumptive trade, which is fine, and that's exactly what I did today on AUD/USD, and I'll show you why. So effectively, you're waiting for a pull in liquidity after an established uptrend. With that trend is either going to continue a little bit or it's going to continue a lot. However, we had this pull back into a very, 2 pulls on liquidity and an aggressive push up. So this is telling me that we have confirmed, and this is going to continue into an uptrend. As it pulled back into here, I was waiting to see if this was going to fail. Instead, it printed this bar, and this is as good a time as any to get in, and I had a wide stop on the 2-point protection side. Okay, so this was the 2-point correction low, trigger area for our buys, and this is the protective side. As this did confirm and started to push here, I was able to take really good profits here and then just immediately move my stop up here. And we can continue to play this on the upside. As you can see, it's starting to move into this gap. So I'm expecting this to take out this gap before correcting, and I will look to short it as it comes into a strategy 3 entry. Okay, strategy 3, fair value gap, 3 consecutively lower tests. Okay, I like to get a pull on the midpoint. My stop would be above this line. So in the event that we come up here and we push up and we take out this low test here, I will start to take short positions. So my positions, I will stagger, we'll go short here with a stop above this white line for a sell-off. Okay, as it starts to move against me, I will look for ways to get out of my initial position. So if it moves up and starts to pivot, and we've pulled mid liquidity now, I will add. If it pulls high liquidity, I will add again. All my stops will be here, and as I get into a break even on my first entry, I'll close that for a break even, net 0 profit. Holding my 2 best trades, I will move my stop up to wherever that pivot was before the price turned around and got my first entry out for break even, and then I will hold that trade for a correction under current levels. Okay, so I'll look for certain liquidity levels to get taken out. Again, strategy 3, this is a trade that I'm in right now and I am losing, and I had a feeling I probably shouldn't have taken this trade because I was expecting it to continue higher. However, because we pulled liquidity and we aggressively sold off, I was thinking that we could potentially go down and pull this low before continuing higher. So I have effectively hedged my position, and now I'm looking to get out for a small loss. So as this came up, my stop being here, it printed this really nice correction on the 15-minute. I sold here, stop above the high. I'm looking for to take out this liquidity. Again, this is similar to a strategy 3, right? We've got higher tests that reacted off of a longer time frame order block. We can find over here. Okay, higher time frame order block here, right, with a fair value gap here. All right. So again, look, it came in, it tapped, it started to reject it. It is very common for these to come up, tap one more time and continue lower. I'm currently betting that it's going to continue lower right now. In the event that it goes higher and it takes out this high right here and interacts somewhere in this area and starts to sell off, I will sell. Okay, as it starts to fall down, I'll put my pivot over the high, my stop over the pivot high, excuse me, and I will look for obvious buyer liquidity to get taken out. So we had obvious buyer liquidity here, took it out, continued the uptrend. Okay, and this is where I was selling. All right, so this was a bad sell. I wasn't very positive about this. I shouldn't have taken the trade, but that's fine. So as this is coming up, I am anticipating that we are going to pull down and take out this liquidity. In the event I get stopped out and it comes up here, I will expect that it will eventually fizzle out and come down and take out points of liquidity. But again, this is not the best setup. However, if we look at a different trade that I took last week, which was beautiful, okay, we were selling off. We had repetitive strikes into this area as marked out here. I was waiting for a pull, preferably on the mid. We got a rejection. I sold, and my stop was above the pivot. Okay, as this started to pull down and pushed under this liquidity, it could have continued higher. That was fine. I took my profits. I still remained in the position, small portion. Okay, pulled liquidity. All bets are off. It can go higher. It can go lower. We don't care at that point. It pulled liquidity. So could go higher, could go lower. What do we do now? We move our stop up and we target an area of long interest. Why was this an area of long interest for me? Okay, again, aggressive buying, no real pull on liquidity. We had a small one here. And again, this is what I was doing on Friday. Same situation, small pull on liquidity. Started a sell-off. I'm short right now. Instead, what happened? It went up, right? And that's what I'm talking about with right here. Okay, pulled liquidity. All right, came at, started to sell off. I shorted it, and this time it did not work out, which is fine. This time, or last time, it also didn't work out beautifully, right? Instead, it came up, took out the highs, which it might do now, and then look what it did. It finally pulled that liquidity in that strategy 3 area and dumped. As it took out buyer liquidity, that's our first target, I took profits. My stop is now comfortably here. I will not lose money on this trade. Didn't lose money on this trade. And what am I doing now? Now I'm going back to the upside. I'm trading the upside, okay? 2-point correction. We've got a point here and we've got a point here. 2-point protection. We've got 2 points here, okay? So in a situation like this, I'm looking for this area to get tapped into. I buy. I put my stop under the 2-point correction. And let's say instead of aggressively pushing up here, it came down a little bit more and it pulled this low. I would buy as it pulls this low as well. Same stop. Okay, and let's say it fails to push higher. Instead, it starts to come down here. And as it starts to get ready to interact with this, maybe it doesn't pull this. Instead, it starts to push up. Either way, as it pulls into this area, I buy again with my stop underneath this 2-point protection. Because this way that the markets work is invariably they will move in between that liquidity point. So I will at least be able to get out of these 2 positions at break even and hold this. Potentially, the trend does continue. Potentially, it goes up and interacts with the key level and I can take profits and move my stop to break even for a longer run, okay? But we have liquidity here, 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 here. There will never be a time in the market when critical liquidity like this, 4 different points, gets pulled without any kind of reaction, okay? As sellers interact with this area, there will be an exchange. It will push up, at which point you can say, this is probably the pivot, there's my stop. Okay, and now I have a finite stop. I've been able to move my stop up. And in this particular situation, which is amazing, you can see it tapped into this area. If we go in the 15, we go, okay, it's pushed up, and now it's starting to sell off. Okay, it could come lower and then continue. But this is a pretty good indication that we're trying to go higher. So I have 2 strategies here, strategy 6, strategy 7. 1, aggressive push up. In a strategy 6, you see a slight pullback and a continuation. In strategy 7, which tends to be even stronger, a very convincing attempt. It sweeps lows just a little bit, and then it starts to go back up, and when it does that, what do? I add to my trade, and now I'm going trading alongside again. Okay, so that is strategy 3, right? And strategy, this is my 2-point correction, 2-point protection style of trading, and this works. These work out so incredibly. You don't need anything else. Okay, AUD USD, very, very similar here. Okay, we pulled critical lows, aggressively sold off. We've broken down under a channel, and we have strategy 3 up here, and we have a very obvious gap here. So where can we target? Okay, first I'm targeting this, and then I want to see it come up into this. And good Lord. And this is an even more aggressive seller area. So I will probably omit trading this area and instead wait for it to pull into this area for a nice push down. And then we may break out of the channel, but I don't really give a shit about that. I know that it's going to come up here. There's going to be an exchange of volume. And on an aggressive push up, it will most likely fail. I can capitalize on the short. It will come back down, take out buyer liquidity. I will close my position. And then maybe it goes up, maybe it goes down. Doesn't matter to me at that point. Okay. But today I bought this, and Friday I bought AUD USD, and I made money on this. So again, 2-point protection. This was a great trade that I took. Okay. Let's go into the 5 minutes so you can see this. This is beautiful. Okay, very convincing push. Pulled liquidity, continued. Strategy 7. Okay, this is a confirmation that we're entering a short-term uptrend, at least a short-term uptrend. Okay, so we have 1 point, 2 point, 3 point, 4 point. So stops are here. I have entries on a break of the low here. I have an entry here, and my stops are here. So as this pushes down, and I was looking at this on like the 1 minute, 2 minute, 5 minute, right? As this pushes down, I buy here and stop like so. As it comes into here, I buy as well. Same situation with the stop. Could have gotten stopped out here. As this confirms and pushes back up, I close this entry for a break even. And then as it confirms, I decide this is going really strong. I do believe we're going to interact with the highs. I buy again, okay? And my stop is here. All my stops have moved up to this point. As it pushes up, all my stops are up. As it continues higher, I trade the market. Okay, I adjust my positions. Okay, if this starts to correct and it comes down to here, when am I wrong? If it comes down like this, then I am probably wrong. It's most likely going to continue lower. But if it pulls down and corrects, it may continue higher. So I don't want to get stopped out if it does that. So I am going to move my stops up at least to here. So now my stops are here. Okay, so there's pretty much no way I'm going to lose money on this trade, maybe a very, very small amount. And then as it pushes and pushes and pushes to the highs, I'm thinking to myself, we're either going to break the highs now and I can take full profit, or we're going to reject and sell off. And if we reject and sell off and we come down somewhere in here and then start to pivot, I will still be right. But if it comes all the way back down and it pulls back this deep, I will probably get stopped out. So now I might as well move all my stops up to under here. I'm trading the market. Okay, I'm not predicting, I am interpreting and reacting. That is our job as traders. We do not predict the market. We have a playbook of familiar things that we've seen. We interpret what the market is telling us. We build our strategy around it. And if there are confluences with our strategy from memory and experience, we can execute a trade. Okay, and then all we do is we manage the trade. We don't predict, we interpret and manage. Okay, Euro USD. Same situation as AUD USD. Aggressive sell-off, took out critical daily support. We have daily support here it has not interacted with. So one of two things is going to happen. This is going to fail and come down here and I will look for buys. Or this is going to fail and it's going to come into a 2-point correction, 2-point protection style of trade where I am looking to take this long. Okay, so we have aggressive buying here and here. If we sweep this low right here, we've got all this liquidity, all this liquidity. What I am betting is that at some point, when price comes down here and sweeps lows, we will start to get a reaction. The reaction may begin here and go this far. It may begin here and go this far. Doesn't matter because we can make money trading it, okay? We have liquidity, 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 okay? We need to have a reasonable stop, so my stop will just be simply here. As we pull liquidity, I will just enter. As the market starts to push up and I see aggressive buying, I can add to that trade and move my stop up. As it starts to simmer out, if it starts to come back, I can either decide to take some profits and move my stop to break even or close the entire trade, right? Again, I'm just trying to interpret this. I would rather take 70% of my position off or 80% of my position off as this confirms for me, because then what the trade ends up looking like is, let's say it pulled the lows here and it pulled the lows here. And as it took the second layer out, I buy with my stop here. Okay, and all I'm looking for is confirmation. That's it. And then suddenly it starts to push aggressively up. As it starts to push aggressively up, you go, all right, well, my initial risk was 1, and my target should at least be 2. Okay, so as it comes up and gets my 2 to 1 out, and I don't even need to risk this anymore. As it starts to push up a decent amount, I'll just move my I'll move my stop up to the bottom of the pivot. Right? I was able to get into a good trade. I didn't wait for confirmation. I didn't wait for 2 really big green candles to say, oh, now it's time to get in. I just understand that there's probably going to be a fluctuation in liquidity once a primary buy position area is taken out. So I'll just put a buy limit underneath. Where everyone's stop is, I have a buy limit just sitting there. Eventually, there will be a reaction. Depending on the way the reaction looks, I will move my stop up to the bottom of that pivot. I will go for at least a 2 to 1, and once I get those profits, I can decide to either move my stop to break even or close the entire trade. Okay? I don't need to wait for confirmation, right? In a situation like this, okay, we're looking to break this level, and then what happens? We go to break that level, all right? And let's say you get in here. This is very strong buying. Now you buy. Let's say you buy somewhere in this candle. And then you sit in all this drawdown, okay? And if you're a smart trader, you understand, well, I need to kind of put my stop down here and at least give it some room to move around. And then you're sitting in drawdown, right? You're at a disadvantage here, right? My trading style is I'll put a buy limit right here. And look, I buy, immediately goes in my favor, all right? So if my buy limit is here and other traders are buying here, then they are 17.8 pips behind me, right? I'm already 17.8 pips in the money when they're at break even because I didn't wait for the confirmation. I understood that given the way liquidity works, if this trend is going to continue, we have 1 point of liquidity, 2, 3, 4. As we sweep liquidity, right, I can just buy. Simple as that, right? And as it starts to react, I go, all right, this is reacting pretty well. All right, let's see if there's follow through. Okay, there's follow through. I can move my stop to break even now or move it. I'm pretty much in right here. I can just move it up right there. I'm in profit, regardless if this just turns around and dumps. Okay, GBP, JPY. Okay, so this is a trade I'm currently in, and I didn't really like this trade. But I am trading this as a strategy 3 into a 2-point correction, 2-point protection trade. Okay, where is my critical area? Right, we do have a strategy 3 area here, but it's just really not that strong. And then we zoom out on the 1 hour, right, we've aggressively taken out highs here, and we've gone down to take out some liquidity on the low side, and now started to continue higher. So what are we looking at here? And this is one of the 2-point correction, 2-point protection situations, okay? It aggressively pushed up on the 1 hour, and even though it ended up failing, you still got to retest the highs. You would have made so much money on this trade, even though you would have gotten stopped out eventually. Okay, and then we get another entry. Okay, this was an entry I took on Friday, and I lost this trade, but look, it hit my profit target. The only reason I lost it is because this candle right here, right, as this started to correct, I moved my stop up to the bottom of the candle, and I got ticked out right here. So, I mean, we all make mistakes. That's fine. We're in accumulation period right now. This can go up just as easily as it can go down. I don't really like that I'm in this trade. I'm really not confident with this trade. But I do feel like before we can really take it long, we need to wait for this area to get an interaction with. So if I'm going to trade this right now, I need to be short. Okay, and in an ideal situation, what I would realistically do is continue selling the rallies. So right now, as this pushes up and looks like it's failing on a 5-minute, right, I can sell again. I can sell right now. And as this moves into my first entry, I'll just close this entry out for break even and continue holding this. All right, but we need to have a finite stop, okay? And it looks like this is going to be the area where if we get taken out, then we might have the reaction down to the downside. So being short here, I have to be presumptive and say, well, it's probably going to take this out and still come down here before buying continues. But do I want to sit in that much drawdown? No. Because what if it just continues higher, right? And now I'm bag holding for a really long time, right? I don't want to do that. So I have a finite stop now. Why do I have a finite stop? Right? Push up, right? It keeps failing at these levels. So I think we're kind of rounding out, and eventually we're just going to sell off. We're going to start taking out this liquidity, and look at all of this buyer liquidity here, right? We're at least going to come in and react from around these structured anchor points. Look at all these anchor points, right? They all dip into this level, and as they push down in under it, they correct. Down, correct, down, correct, down, correct, down, correct, right? There was a gap here, immediately corrected above it. So at a market open, there was a gap, immediately corrected up. So I think that if we are going to continue higher, we need to interact with this area first. So I need to be a seller right now. Why? Why do I need to be a seller? Right? Why wouldn't you just buy here for the break? Right? Because we have started a move and we have not come back down to take the liquidity out. Okay, I do not want to buy a move that's already started to move. I want to see that the move is established and it wants to continue higher, but liquidity has been pulled, and therefore now that uptrend can continue, and 90% of the time it will attempt to continue, at least for long enough for you to identify that when you are in fact trying to go back up, you can move your stop to under a pivot, you could take profits and then move your stop to break even. Maybe the trend does not continue. It doesn't matter, right? Here, we are very presumptive buyers if we're trading in this area. The move has pushed up, down, down, up, down, up, took out highs, pushed up, came down. Did it take out liquidity? No, right? Double bottomed, continued higher, right? Continue higher. Did it take out liquidity? No. Put a pivot, came up. Put a pivot, came up. Pivot, came up, pivot. No liquidity was taken out at all. And then look what happens. It taps underneath it, right? We have buys here floating. We have buys here floating because this is a new trend. Our point protection would be down here. Why? Because this is aggressive push, liquidity, liquidity, liquidity. 2-point correction, 2-point protection. Okay, so if price comes here, buy limit. Price comes here, buy limit. Where's my stop? 2 points, 2-point protection. So we have a buy here, and we have a buy floating underneath here. Right? All of our stops are underneath this 2-point protective area right here, and that is a strategy. Okay, and then what does it do? Is it confirms, pulls back, and confirms. So at this point in time, you say, it's taken out the highs. We can either take profits, but we do need to move our stop up to at least here. And I mean, now this is a 5-to-1 trade, and we don't need to risk anything anymore. We immediately went into profit. Now, what happens if instead you were to wait. This pushes up, it comes back down, it pushes up, finally breaks, okay? Finally breaks this high, and you go, okay, I'm a breakout trader, so I'm gonna buy the breakout. Where do you have to put your stop? Right? Are you gonna put your stop here? No, you get taken out. You need at least you need a good area. So now you have to have this big stop, and you don't really know where it's gonna end up going, right? Because it's already been going for a while. It's not convincing. It has not pulled the buyer liquidity that it needs to. So what I'm thinking is, because we haven't pulled buy liquidity, that every time we push up, it's actually going to sell off. So I see an aggressive buyer, I get ready to be a seller. Why? Because I think that there are going to be a lot of retail traps. A lot of buyers have stops accumulated underneath these liquidity levels. A lot of buyers stand to lose a lot of money. I don't want to be a buyer right now. I want to wait to be a buyer, because what I think is going to happen is, as people can continue to develop their buy positions and move stops up, what the markets are going to inevitably do is come down and take out some areas of liquidity, and then the market may continue higher. But until that time, I'd rather be a seller. So I'm actually planning on adding to this sell position in a moment here, so I'm going to end this video. But again, this is how I trade my two primary strategies. Strategy 3, right? We have a strike area, high, middle, low, and fair value gap and button. Right? We've got a pivot area, order block, we've got a fair value gap, 3 consecutively lower attempts. Okay? I don't know why it works out so damn well, but it really, really does. Okay? So as we start to take out this liquidity, the buyers stop to become as active, and we can start to develop a position, and as it moves in our direction, adjust our stops, wait for liquidity to get pulled, take profits on pulls of liquidity, and then decide if we want to actually be buyers or not. Because at that point, it doesn't matter, we've already made our money, okay? We're purely trading off of the susceptibility and the easy targets that are retail traders, okay? These poor bastards come into the market, they chase breakouts, and they lose money. And where are their stops? Target their stops, and you will make money. Put your buy limits and sell limits where everybody else is putting their targets and their stops. And guess what? You'll make money. All right? Anyways, guys, thank you so much again for joining me. If you like these videos, please like and subscribe. I love you all very, very, very much. And continue trucking along. Continue making this stuff work for you. I'm going to kill this fly now because he's driving me crazy. He's trolling me during this entire video. And until next time, guys, peace out.